right, this is Jeff Mackey live. I'm Spencer Israel, Stock Market TV. That guy, the other guy, is that way or that way? I don't know. Is Jeff Mackey from the Mackey Portfolio. Jeff, let's talk about toy stocks. Mattel reported earnings here, and it wasn't a good one. Well, I think we can say that it's down 22% today, but off the
Off the
lows.
lows.
Off the lows.
Off the lows.
Let's talk about Mattel and what the hell just happened, and why did it happen? And then let's talk about Hasbro, because I was under the impression that these two companies were in the same business, and yet they very seldom trade together. It's kind of weird. So
yeah, I had kind of a weird neighbor, and like we had GI Joes and she had Barbies, and we would take them out on dates. You would think they're one made by Hasbro, one made by Mattel. You think that they would be basically the same company, but you can see there over the last year, there's Margin Clerk Barbie from the actual 80s toy career Barbie when they were crazy enough to think girls could have jobs. That's wild. But yeah, so that stock is approaching tariff lows. I think that's probably what got people in it today. And if you take a look, the problems really that face them were kind of inventory. We'll get to that, but the big difference between the two, Hasbro has just a ton of digital IP that they've managed to make money on. Barbie kind of did, or Hasbro has all the digital IP, and Mattel does not. And so they've got Uno. They don't have any of the board games that Hasbro's making money on. And they've got inventory risk. This all dates back, ironically enough, to Mattel buying the Learning Company for $4 billion in 1998. Ever since then, they've been basically scared blankless to go into apps or anything else because they just got their faces ripped off by Mr. Wonderful like 25 years ago. And these things leave a mark. Their stock is 30% lower than where it was. If you go to the next slide, I'll kind of walk through the impact of it. What happened last quarter was really, it was a downstream tariff impact that no one saw coming. Now, both these companies produce a lot of their stuff in China. So you think, no big deal. Mattel had a 480 basis point impact on their margins because they were forced to eat inventory. You see, they don't pay the tariffs until you actually take physical possession of the goods. And so the risk shift was that the retailer said, you know what, we're going to hold off on Barbie and we'll just order it kind of just in time. And it turns out just in time was not this time. And so the orders did not come through for December. Mattel ends up sitting on a ton of inventory, which, wow, do you not want a ton of Barbie dolls after Christmas? That's like having the Cadbury eggs after Easter. They don't move. You got a real problem if you're sitting on warehouses full of Barbie dolls. And so they're taking it hugely on the chin, not just for last year. Not only did fourth quarter disappoint, but then they've got to carry those goods over and try to make it come, try to figure out how to get those things out of the warehouses next quarter. And they need a new plan, because holy crap, does it turn out we're not protected against these retailers just going just in time on us. So all these things conspired to just sort of make it a nightmare for them, even as they're moving production out of China. But that's not really what their problem is. The problem is that they just don't have any digital IP to lean back on. And they're just super heavy on inventory, and they don't want to take that risk. Not in the new world of tariffs. Retailers just kind of, They've got some leverage there, and it's Mattel's cheap. I mean, I think people woke up this morning, they saw it was down 25%, and some people just buy anything down 25% with a PE of 12. But it's if you look at just the duration of this how long it's been dead money, it didn't just kind of die. And in fact, with the Learning Company, that might have been what killed them. But if you look at like a 10-year chart, 15-year chart, it's just gone nowhere. It's only over the last year or so that you've just seen a really huge divergence between Hasbro and what Mattel's doing. And it's largely based on just this kind of lack of anything. Hasbro's just a much better diversified company, and there's too much Barbie. If you look at the 10-year chart, that's the last year. I mean, Hasbro's been on an absolute heater, just doing incredibly well. Monopoly Go kind of struck a chord with people. People loved it. Scrabble, I contributed to Scrabble. That's the 10-year chart of Mattel. You can't even see the Barbie movie there. See that
Yeah,
little blurb?
I remember that in the moment, that little upswing there seemed like a big deal, but I guess it wasn't because
It turned out not to be a big deal. The guy running
yeah.
them at the time actually took off and is now running the Gap. Nice job there. Good work, kind of career switching, because it turns out that there's not going to be a Barbie movie sequel. It's the Barbenheimer thing. In fact, the company pointed to it as an ongoing problem because they sold so damn many Barbie dolls during the Margot Robbie crazed, Barbie movement. I guess they don't have Wuthering Heights Barbie because Margot's moved on, everyone's moved on, and Barbie dolls, much like Yeti thermoses and a lot of other kind of hot products, well, they last for a long time. There are plenty of grown women who still have their Barbies hanging around someplace, and no one needs them once they have them. So their stock, Mattel announced a huge investment, and they're going into software, which seems belated to say the least. I'm not sure if this app thing is going to work out for them at this point. So they bought all their rights, and they're going to try to come out with sort of Hot Wheels, the app. We'll see how they do with that. I'm not sure it's going to be the raging hit that they're looking for. It's hard to see how they get out of this box. The stock seems oversold, but man, toys are a tough business, and once you've lost your mojo, it's you're just going from hit to hit.
Well, I was going to ask you, did they say anything encouraging on this call?
They're in the toy business, and it doesn't attract a huge group of cynics typically, and so they were kind of not necessarily as negative as you would expect. I mean, they're not going bankrupt anytime soon, but they turned next year, the year we're in now, into just a year of investment, as they call it, which means don't expect anything anytime soon. But again, this is just a really tough industry. If you look over the last 5 years at Hasbro and Mattel, they're going their separate ways right now today over the very specific 1 year time frame. But over the long haul, it's if you would put your money in the S&P, you'd be up almost double. And Hasbro and Mattel, all the toys are misfits, I guess is the answer there, Spencer. It's just a tough business, and the monopoly guy, Barbie, you can have all these kind of iconic American brands, and it's just hard to get much more than a multiple of 10 to 15 out of it.
I mean, on that Mattel chart, if you go back 30 years, it's flat, right? Not even 10, 30.
It's the chart with Mr. Wonderful on it is the lifetime of the company. And it looks like just kind of Levi's, where I don't know what they were trying to convince people, we're going to just be not just your toys, but we're going to teach your kids to read. We're going to teach your kids to do whatever. Didn't work. He sold that for, I guess, $4 billion. He was running the learning company at the time. And, the accounting scandals ensued. I don't know if he had his I'm a mean guy persona before that, but he sure had it afterwards. And that's where it all started was it's this kind of freaking deal that he did with Mattel. Mattel sold the company later for effectively zero money. They sold it within like a year and a half. It was regarded by many as the worst deal in corporate history.
And that's $4 billion in May of '98. Which
was real money then. That was real money for sure. And it was there were the suits involved just accusing the learning company of jamming the channel and putting much of that's kind of fake profits on the books. But it was really the case of Mattel just not being that smart.
Put that in perspective. That's if this calculator is right, that's roughly $79 billion today.
Right? It leaves a mark, man. It leaves a mark. I mean, it makes sense that Mattel's a little leery of, so to speak, no pun intended, of going into apps.
Right. Sorry, that's not right. It's 7.9. 7.9.
Yeah, it's still a lot of money.
$7 billion. Not 79. $7.9 billion. Today.
It's a lot of Barbie dolls then. Yeah. It's a lot of Barbie dolls now. And they have just kind of made much more cautious inflows into the app world. Whereas Hasbro has just managed to make some money. Now that gave them a buffer. They were still hit by tariffs. A lot of toys are made in China. And if you're not making them in China, you're making them somewhere else. So that sort of haphazard kind of craziness that we saw from the tariffs just changing constantly, that impacted both companies. But Hasbro with a digital presence, that gives them a nice buffer that Mattel just doesn't have. So they're literally, we're just sitting on all kinds of for just it's the easiest picture to paint is warehouses full of Barbie dolls. And again, trying to sell them in January, much harder than expecting that Christmas rush to kind of get things through for you.
Just trying to find an equivalent. Just imagine spending the entire value of like Birkenstock, which is basically what that is. That's roughly $8 billion today. So imagine just the entire value of that company, or Cleveland Cliffs, or Wingstop, the entire value of those companies to buy the learning company, right?
Yeah. Yep, which was and it was they paid a lot even on the estimates that they had. It was supposed to earn something like 150 million the next year, and then they had just kind of an upward line to the right. It was going to be just this is how everyone's going to read in the future type of thing, and it turned out not to be the case. So it left a lot of eggs on everyone's face except Mr. O'Leary, who was excellent in that movie that was just played himself.
Yeah, right. That's what I've heard. Anyway, today is going to end up being, from a rate of change standpoint, one of the worst days in the stock's history. So,
and you can buy it again, but there's just not a huge amount of upside. And I think the takeaway here is the tariff impact. Everyone's been kind of wondering where that went, right? Because it was supposed to show up in inflation. It was supposed to show up all over the place. Apparently, it showed up mostly in Mattel's warehouses, but it really kind of gave the retailers a lot more leverage in terms of when they took goods. And it's all about when they take physical possession of the goods, of the merchandise. And so the retailer said, we'll wait on it. And Mattel bet on themselves and lost bigly. So, they've got a buyback in place, but for the most part, they're buying up. They had an app partnership with a company, and they're going to take over all of it. But again, man, software development is I'm not sure that's going to be the solution as far as Wall Street's concerned right now, because that's its own kettle of fish.
Have they heard about this thing called AI? I don't know. Maybe.
Apparently not. Yeah. I mean, you go on Claude AI and design a Barbie app form in probably no time. It would take like 35 seconds. But or a reading app for that matter. I mean, there's a lot of things that have gone wrong over the years, but that's the one that left the biggest mark. And some of these companies should just simply be private. Hasbro should be owned by the Has brothers, and they should just be collecting really nice dividends on Monopoly year after year after year. And Mattel should be private. They shouldn't be trying to make an Uno app. They have Uno that you can play solo. That's one of their big hopes, is that that's going to take over the world, which just seems sad in a lot of different ways.
All right, we'll find out. Listen up. If you're not getting the Mackie letter, you're missing out. Jeff sent a great note to his people yesterday, all about Target. And in fact, if you're a member of the Mackie portfolio, you got Jeff's trade of the year, which at this point I'm just going to say it was Target. You got that idea 2 months ago, right? That was like 100% ago on the trade. So if you're not getting Jeff's content, use the links in the description on YouTube. You can get the Mackie letter, sign up for the Mackie portfolio, and you'll get Jeff's picks. He's been absolutely crushing it. Really, I guess since Liberation Day, basically. Well, since April, we've just been on fire.
And we liberated everyone, man. And before Thanksgiving, this is a tough time of year. So this is a good time to kind of get the insights, because you've got to be real careful about where you're sticking your toes in consumer discretionary at this point. We're going into earnings next week, and things could get hairy out there. You can't just listen to toys were strong. This is what stocks look like in a toys are strong universe. Not all toys, as it turns out.
Not all toys. All right, we'll talk more about the earnings next week. Jeff, a pleasure as always. Everyone, thanks for watching. Drop us a like. We will see you next Wednesday.